What's up, guys? It's Sam here. Today I'm going to be doing a bit of a follow-up on Gino's video on some of the stocks that I picked that I sold out of too early and I lost an awful amount, a lot of profit on. So there's one here particularly that is an absolutely crazy miss that we missed out on. So just bear with me here and we're going to go straight into them. And remember to join our free Discord, which is down in the description. Hit the like button, hit the subscribe button. We're really on course to hitting that 200 by the end of the month, and we appreciate you all for being here. So look, let's get straight into the video and see some disappointment. Alright guys, so the first stock we're going to get into, that is probably the biggest mistake that I made, but I was so kind of uneducated and didn't understand at the time the potential of this stock, and that is Novavax. So Novavax is a stock that I got into maybe at around $16 to $18 a share when I first bought my first few shares, and then like over a 2-week period it literally went from 18 to 36. And I was like, oh my god, it's 100%. It's 100% in just 2 weeks. It's absolutely crazy. So I took my first bit of profit there and I was like, okay, that's a great profit. This is surely just not how this works all the time. So yeah, you can look where Novavax went. So Novavax, I sold it around here, between 36 to 46. And yeah, this thing peaked out at 331. So this is, it's over a 10x, 10 to 15x at the peak of where it was. And this is just due to a few things. So they got a lot of attention due to the coronavirus vaccine that they were creating, and also because of the original thing that drew me to this stock was its nano flu vaccine. So this is just to replace the standard flu vaccine that goes every single year. So Novavax have been creating this new flu jab, which has actually been seen to be better than the previous one that is issued every year by Sanofi, which is absolutely crazy. That's why I got into this stock, and I was like, I saw a bit of potential, and I was like, this could be good. But I just didn't understand the whole potential of where this could have went over time. And yeah, this has been an absolutely crazy stock. Like, some people are buying this stock in 2019 at $5 a share. It's absolutely crazy. So look, you can just see here, like on their website, the pipeline of what they're doing. They're in phase 3 for the COVID-19 vaccine. They're in phase 3, which has already gone to the FDA for the seasonal influenza vaccine. And yeah, they're also doing like a kind of a vaccine for infants as well. But don't get me wrong, the science kind of ones, I don't understand them on a high level. I just saw a bit of like the flu vaccine, and I saw the kind of the results that came out of it and how effective it was, and I was like, oh, that sounds like a great idea. But yeah, definitely one to kind of maybe consider if you do understand this kind of stuff and the vaccines that they're creating, and you do understand on a high level. It's definitely one to be kind of looking out for and just seeing how they progress over the next few years. So going into the second stock that we have here, and it is Synchrony Financial. So Synchrony Financial, very similar to Gino's with Discover Financial Services. They're a credit card company, and they really just kind of took a bit of a hit, as a lot of companies did last March and February. And yeah, I picked up this stock at around 16 to 17 a share. And yeah, same reason as what Gino was saying. It's nice to have exposure into the financial markets, but these kind of stocks, they don't come with high growth rates at all anymore, compared to a lot of the more exciting stocks that you get with like SoFi and Affirm and a lot of different fintechs. So this stock, I saw it as a valuation play, solid. They're great balance sheet. They're not going to be going out of business anytime soon. They really got through the pandemic really well. And yeah, so I picked this up at around $17 a share. I got a nice little profit, about 20-30% on it, and I sold out of it. And yeah, now I'm here to regret my decision that I did that and took them short-term gains, as it would have been a solid part of diversifying your portfolio, and also you would have got some really nice gains from it there, close to over 200%. So yeah, they're a great company. They're still really undervalued, in my opinion. Like, it's just like it wouldn't be one that I'd be personally looking for anymore. Just like my criteria for looking for stocks has just kind of changed from when I was looking at it back in the early days of starting this. So look, it's bringing you straight onto the website. You just see here, they're a credit card company. They can integrate with your own business. Yeah, like they're just like, it's pretty kind of easy to understand their business. It's a credit card. They make a lot of money when people don't pay their bills. But yeah, look, they're a good company. Definitely want to consider if you do understand the financials and you want exposure to them. It's definitely one to consider. And also, like, Warren Buffett is also involved in this stock as well. So the third stock we're going to get into is Appian Corporation. So Appian first came to my attention as I saw there was a lot of different articles about them on the Motley Fool, and they're kind of recommending this stock as a starter stock for people just getting into the market. And I kind of looked at it and I was like, maybe I kind of understood that it's automation, it's to do with creating workflows, them kind of things. And I was like, maybe I'll have a look. I just had a look more into it and I was like, yeah, it looks kind of solid. They've been around for a long time. They're expanding their business. They've got a kind of a solid balance sheet, but look, it's nothing crazy. They're not growing by crazy margins. They're growing just at a nice kind of steady pace, like similar to one of our other picks, like which would be Dropbox. But yeah, look, I kind of looked at them and was like, yeah, look, I'll give them a bit of a go. Did a bit of research, just kind of looked into their website, some of the products and the low code automation that they do, and I got into this stock. Probably around 38 to 45 is when I was on a buying range for me, and I sold out of this at around 55, something like that, and I lived to rue the day that I did that, because it went up to 260 at its peak. So that would have been an easy nearly 5x from where I started at. I know it kind of dropped as fast as it went up, but now it's starting to recover again, and where it stands right now, it's still over a 2x from where I was. So yeah, look, they're a pretty solid company, and the valuation is just got a bit too high for me at the moment. They're not profitable either currently, but yeah, they're definitely one to really consider if you understand low code and automation at a high level. Like, I'm not claiming to understand it at an extremely high level, but yeah, look, this is just bringing you onto their website. They're partnered with a lot of different companies, which is always really good. When you see a company has a lot of different partners, their revenue is not centralized around any single person. So yeah, their business model is pretty sticky, and they're in a lot of different pockets as well. So yeah, they're a very, very good company, and it's definitely one to be looking into if you are into this kind of stuff, like low code, app development, workflows, them kind of things. So yeah, look, Appian, big mistake. Also didn't understand the company on an extremely high level as I do with the current stocks I own. But yeah, they're definitely one to consider and definitely one to look into. They are a good and solid company. But yeah, it's not financial advice at all. So the final stock is the Trade Desk. So the Trade Desk has been a bit of a thorn in my side. I've always wanted to own more of this or buy in, and I just never seem to find the chance to do it. I never seem to have capital at hand just to put money into the market and buy this stock. It just never seems to be the right time at all. But I did start a position in this pre-split basis at around 275. I just bought a couple of shares. I made about 200-300 euros, and then I sold out of it, and I was happy with that. And I never got to buy back in because it just went on an absolute steamroller for the rest of the time until now. So yeah, they're definitely one to really consider. Like, they're involved in targeted advertising. We mentioned them in the last video. They've got issues possibly in the future with Google, but they're growing really, really well. Their P and forward P isn't as high as some other kind of tech stocks of really, really high multiple. They've got a solid balance sheet and a solid mission, and they're really doing really, really well at the moment. But yeah, just to keep in mind, the only major risk I see is that Google ad thing that's coming up in 2023. So just bringing you to their website. They're based in Ventura. They've been around since 2009. They really help people get targeted advertising to get the most out of your advertising budget. So yeah, look, it's a stock I really want to get into, but the valuation is still pretty high for me when you're looking back at what you had it at before. It's really difficult to bring yourself to get to buy it now that it's so much more. It's nearly a 3x from from where we had it at one point. So yeah, it's pretty crazy, but they're definitely one to look into and to keep an eye out for any moves downwards in any sharp shape or form. I would love to be getting involved in this stock. So look guys, that just brings you to my top 4 mistakes, and especially the likes of Novavax. That was an absolutely crazy gain that we missed out on. But yeah, look, this is why you do your research into a company and you buy and you hold that company until you reach the pinnacle that you think it can get to. Obviously back then I was thinking that this was the pinnacle, and it just really wasn't for all of these stocks that we mentioned. So look, thanks guys for listening. Remember to join our Discord, hit the like button, hit the subscribe button, and we really enjoy you watching these videos. Thank you guys. Bye.